I'm Matt Bishart with REIT.com, and I'm here in Washington, D.C. for NAREIT's Washington Leadership Forum. I'm joined by Bob O'Brien, U.S. Real Estate Services Leader with Deloitte. Bob, we spoke to you in October, and you identified 10 commercial real estate trends that you were watching for this coming year. Now that we're a couple months into 2012, if you had to identify what those top three are, what would you say?
Well, I think the top one would be macroeconomic trends. We're still very focused on that, right? We've seen nice job growth over the past few months, but unemployment's still in the mid-8s. We've seen consumer spending increase, but consumer incomes have stagnated. How sustainable is that? We continue to have the sovereign debt crisis in Europe. Oil prices are way up. So this economic recovery is still very, very fragile. I think the second major one would be the CMBS market. When we put that study out in October, the CMBS market had pretty much frozen up late summer and into the fall. We are seeing the CMBS market reemerge, and that's a great thing for real estate. With the amount of debt coming due over the next few years, we need a properly functioning CMBS market. And then finally, the amount of capital that REITs and private equity players have to deploy. They've been very patient at deploying that capital, very disciplined. It's great to say in our industry. We expect a lot of that capital to be deployed over the next several years, recapitalizing, doing acquisitions, particularly around all this debt that's coming due.
Picking up on the last point that you made, listed REITs have been very active raising equity and debt capital, but that hasn't really transitioned to acquisitions yet. Is that something that you think will be a 2012 trend where we see more M&A activity pick up?
Well, I think the M&A activity we've seen has been very strategic. It hasn't been a cost of capital play. It's been very strategic. Where we've seen it, for example, in industrial REITs and healthcare REITs, there is a strategic purpose served in those M&A transactions. Where we haven't seen it, say in the office REITs, the retail REITs, the hotel REITs, perhaps that's a function of the macroeconomic uncertainty we were just talking about.
And what is the current prognosis for the convergence of global financial reporting standards?
Well, it's more uncertain than I would have said 3 or 4 years ago. What we're seeing is the SEC is continuing to take a look at the path it would like it to take. We are seeing some convergence. I think the leasing standard, which has gotten a great deal of attention among the NAREIT constituency, is one indication of the convergence. I think the investment property fair value reporting proposals is another great example of that. But I would say in general, the timeline's not clear right now in terms of how exactly this is going to play out.
And Bob, you recently conducted a webcast on the use of business analytics. What would you say is the key issue driving the need for advanced analytics?
There's a tremendous volume of data available today. There's a tremendous, there's great velocity of the data. And there are great analytical tools now to capture that data and really drive business decisions, whether that's pricing, cost management, maybe you're doing this around your energy costs and using data around that, or it's competitive intelligence. But what we're seeing with the ability to process data technologically and provide insights to management, data analytics is becoming a real powerful tool in real estate and elsewhere.
Bob, thank you so much for joining us.
Well, thank you.
For more on this and other REIT news and analysis, be sure to visit REIT.com.